Okay, well, thanks, Dan. Thanks for the introduction, and again to Winvesting for inviting me to be here. I enjoy these things. I love trading. I like talking to traders and talking about the market. So this is good fun. So I'm really glad to be here. And for the attendees, please make this interactive as I go. Ask lots of questions. This is nice. No rush in this this format. So I got an hour and 15 minutes, and I can field all your questions. And as we're going through this, toward the end, I'm going to talk about how I trade and how I use Ichimoku Cloud and Elliott Wave, combine them together. And you know, when East meets West, I say so many good stuff happens there. And I'd be happy to look at any charts, any stocks that you're interested in, and apply them to my method, filter them through there, and offer my opinion on that. And Dan had said, you know, they structured this event so you have actionable information. You're going to walk away from my presentation with at least 3 trades that I believe are great that you can go trade right away. You can place your orders during this session. So that's my goal, to get you some good trades. So let me jump in and get going. So just a quick disclaimer, as always, all the fine print here. You know, hey, I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. I'm going to be talking about the markets. I'm going to be looking at some trades that I think are good using my method. Whether anybody takes the trade or not, you know, that's up to them, and they assume the risk. Everybody knows there's risk in trading, right? I'm not giving financial advice. I'm just telling you what I'm doing. Okay, I'm going to walk through these areas here. I'm going to talk about some of the tools that I use in my trading and in analyzing charts. I'm going to touch just a little bit on a simple portion of Dow Theory. Dow Theory is really cool, and it helps me in my trading. Then I'm going to get into Ichimoku Cloud, just a brief overview of it, and then a brief overview or review of Elliott Wave theory, a simple version of Elliott Wave theory. If anybody's rolling their eyes going, oh, Elliott Wave, one of those guys, you might be happy with how we're going to approach this in a super simple and repeatable way. Then I'm going to talk about how I combine them, how I overlay Elliott Wave and Ichimoku Cloud together. I'll share some of my current favorite trades. You're going to walk away with some actionable trades. I'm going to scan the markets if we have time, see if we can find some new ones. I'll show you a cool scanning technique that I've come up with using Ichimoku Cloud Indicator, and again, applying Elliott Wave to it. And then I'll analyze toward the end any charts that you're watching that you'd like to see analyzed using this method. And again, please ask questions as we go. Make it interactive, make it a useful presentation for you. Okay, so again, the key tools that I use here: Dow Theory, Elliott Wave theory, Ichimoku Cloud. I use them all together. So Dow Theory. So Charles Dow came up with some pretty significant theories back at the turn of the last century. And what he came up with is still in use today. Now, what I'm talking about here is certainly not a comprehensive view of Dow Theory. This is a portion of it and a simple element of it. But this thing that Dow Theory tells us, and it sounds so painfully simple when you hear it, but it's so powerful. And that is, how do you know if you're still in a trend, right? So Dow said, hey, you're still in a bull trend, an up market, if, you know, because price does not move in straight lines. It moves in a series of, in an uptrend, higher highs, higher lows, higher highs, higher lows. And as long as it continues to do that, as long as the higher lows are above the previous lows, and as long as it's still putting in highs, you're in an uptrend. The Dow just put in an intraday high today. It's in an uptrend. It's putting in new highs, right? Okay, same thing for a downtrend. As long as it's a down, as long as you're putting in lower lows and lower highs and lower lows and lower highs, you're still in a downtrend. So, you know, in the middle, particularly if you got a trade on and, you know, it goes down and you're short, it goes back up, you go, oh, is it turning? Is it turning? You can use these rules to bring confidence and go, no, it's not turned yet. It hasn't proven a change in trend, right? As long as we're putting in lower lows, lower highs, lower lows, lower highs, we're still in a downtrend. Okay, how do you know when it's changed? When that pattern gets broken, right? In a bull trend, you know, here we go, higher highs, higher lows. It takes 3 data points to prove that an uptrend has begun, like coming out of a trend or in the trend reversal from a bearish trend to a bullish trend. You got to put in a high, then a higher low, and then a new high. One tick above And there's a high probability that you have a bull trend beginning. Now, given that those 3 data points, we don't know how far it's going. We go, trend has changed, it's going up. So pretty cool. It confirms the trend starts, and then when does the trend end? Well, here we go, higher highs, higher lows, higher highs, higher lows. Uh-oh, lower high and a low, took out the previous low. Pretty good chance that bull run, at least that portion of it, right, has ended, and it's going to correct or do something, right? But that leg, that move has ended. Okay, and then in a down, it takes 3 data points to prove a bearish trend, a downtrend, right? A low, lower high, new low. Boom. Looks like we got a downtrend. Lower lows, lower highs, lower lows, lower highs. Uh-oh, we didn't put in a new low. Here's a higher low. Went up, took out the previous high. Bear trend's probably over. That's really helpful, right? As we look at, particularly as we apply it to Elliott Wave, we want to know, are we in an impulsive move? Has it begun to correct? Or has it begun to extend, right, into a new move? Yeah. So Michael says Dow Theory also combines overall trend plus transports to confirm. Yeah, so there's a lot of intra-market correlation in Dow's overall theory. So I'm just talking about this trend portion here. Okay, so I find that helpful in my trading and analyzing trends, just to know, is it still going? Has it ended? Is it beginning to correct and go a new way? All right, let's talk about Ichimoku Cloud. So Ichimoku Cloud, it's also known as Ichimoku Kinko Hyo, right, in Japanese. It's really cool. It's a good indicator for defining support and resistance, trend direction, and a gauge of momentum. And it can provide some trading signals, right? It was developed by this gentleman, this handsome fellow, Goichi Hisada, a Japanese journalist. He started in the 1930s, and he published his system in a 1969 book. So it took about over 30 years to get it dialed in. But that's the history of the Ichimoku Cloud. So what's it look like on a chart here? So I've got it. Here's what it looks like on TradeStation. And if you're using Ichimoku Cloud, you can see that I've changed the colors a little bit. Okay, I've changed the colors to make it work for me on my chart. Okay, a couple questions. What time frame do I use? It works on any time frame, right? The stock market stock charts are fractal. They have the same patterns at any level of magnification, so it works at any time frame. Is it very reliable other indicators? I'm going to show how I combine it, right? So Ichimoku Cloud on its own is useful, but I don't think it's a complete trading system. I wouldn't try and use it on its own. So here it is, Ichimoku Cloud on TradeStation. And again, I think it does a great job of identifying trends and predicting support and resistance areas in that trend. So there's some components to Ichimoku Cloud. I'm showing 5 components on here. I'm going to walk through each one of them real quick. The first is this yellow line, and I've bolded it so we can see it jump out. It's called the Tenkan line, or the conversion line. It's very similar to a simple moving average line. A simple moving average line is the average. It looks back some number of bars that you define, you know, maybe 10 bars or 50 bars, whatever you set for a fast moving average, simple moving average. And the simple moving average takes the average of the closing prices of those bars you're looking back. The Tenkan line is calculated by taking the highest high and the highest low, and the average of those divided by 2 for the look back period. Okay, so it's similar but different. So when you get that fast moving average to cross over the slow, the Tenkan to cross over the slow, that can indicate a change in trend, right? Or when it's above, it could be saying, you know, we're in an uptrend. When it's below, it could be saying we're in a downtrend. So the Kijun line, or the baseline, is simply looking back a greater number of periods, same formula, highest high, highest low, divided by 2 over a greater number. So, you know, some people, you know, simple moving averages are very, very popular. People look back, you know, at 250 or whatever. So you can do the same thing here with the Tenkan Kijun, set them at different periods, okay? Again, crossover can indicate trend change, but there can also be some false calls on a trend change. So by themselves, they certainly aren't dependable trading signals. They help confirm. So the next line here is, I'm pointing to it with the arrow here. It's this green line at the edge of the shaded area, and that's called the Senkou span A. It means going first or preceding. It's the faster part of this cloud boundary. And both this, the span A and span B, predict nicely some support and resistance area. Tent is asking, can you use 9 and 20 MA crossover? I'm using different numbers than that. There are some default factory settings that come with most Ichimoku Cloud indicators, and I've changed those settings. I've back tested and found it to be a little bit better. So I don't know, I guess you could use 9 and 20, you could go test that, but that's not what I'm using. Okay. So Senkou span A is this green line. It's the faster portion, right? And the formula is the fast line, Tenkan, plus the baseline divided by 2, and it's plotted ahead. So this is what's interesting about the Ichimoku Cloud, is it's plotted ahead. So it's predicting however many number of bars in the future you've set where the support and resistance are going to be. You know, lots of indicators give you a beautiful picture of what's already happened in the past, right? But they're all lagging in nature. Ichimoku Cloud predicts into the future where support and resistance are going to be. That's really useful, I think. So span A is the faster portion, span B is the slower portion, and then the shaded area between is called the Kumo, the cloud. And the thicker the cloud, the stronger the support and resistance that it's predicting. And when the thinner regions of the cloud, because price ultimately breaks the cloud, you can see that it always ultimately breaks through the cloud, but it typically breaks through at the thinner portions, and the thicker portions are predicting stronger support and resistance. That's useful, I would think. All right. So the crossover of the Tenkan over Kaijun conjunction with breaking the cloud, right? So we can get some false signals, but when it lines up, man, when you get a break above the cloud and you get a crossover, and we get some Dow Theory happening here, right? With a higher high, higher low, new high. Whoa, look at that trend go, right? Pretty cool stuff, pretty cool stuff. Okay. Once the trend gets going, the cloud formed between span A and B, the Kumo, can provide uncanny support and resistance predictions during the trend. And you can see how price pulls back to the cloud. Sometimes it'll even come into it, right? But it is predicting with a great deal of accuracy where the support and resistance are going to be. And that's super helpful, I think. Again, jump in with questions as we go here. We got lots of time. So if I were to evaluate the Ichimoku Cloud as a trading system, I would say it does an excellent job of trend identification. It can call some early entries, and it can predict some support and resistance areas. But I need, in order to have a complete trading system, there's some more things I need. I need a price target, because I want to predict the reward to risk ratio on any trade that I'm going to take. I want to make sure I can make more on a trade if it wins than I'll lose if it fails, right? If I can hold that, if I can win more on my winners than I lose on my losers, all I have to be is a 50% trader, right? I only have to win half the time and I'm profitable. I want to win more than half the time. It takes a lot of pressure off. So I need to know what a price target is so I can calculate reward to risk. Got to have a method. I got to have a way to manage risk during the trades, which here it really means stop placement, right? I use stop. You know, every trade I take has a stop, an entry, and a target, and then I determine my position size by the distance between the stop and the entry, and I divide that into 2% of my account. And that tells me how big a trade to take. So I don't use a fixed position size, and I don't use a fixed stop. I base my stops off the reality of price on the chart. I'm going to show you that in a few slides how we determine the stop. Then I calculate position size never wanting to lose more than 2% of my account on any trade. I don't want to lose any, but I can tolerate a 2% loss on a losing trade, right? That's not a major setback. Better to use in a trending market and not choppy. Tent is asking. I only want to trade trending markets. I don't want to touch choppy markets with any indicator or system, unless you're scalping. So regardless of the tools I use, I want to trade trending markets. And the good news is, regardless of what the major indexes are doing, you can always go find sectors and individual issues that are trending and have nice setups and patterns. We're seeing that now. Okay, so Ichimoku Cloud's got some good things going for it, but I can't determine a price target. I can't manage risk with it. I can't manage my trade with it. It doesn't really give me an exit point. By the time we've broken down the cloud, it's way too late to be out of the trade. So I need some other things to help me in my trading. So I use Elliott Wave, and Elliott Wave is easy, right? All you gotta do is memorize these 144 pattern permutations of super millenniums and submillenniums and super cycles and primaries and atoms and protons and quarks, right? Everybody up for that? I'll let you look at the chart. You should have that memorized in about 2 minutes, right? What nonsense, right? What absolute nonsense. That's why so many people turn away from Elliott Wave, because some of the approaches to it are that complex, and the practitioners can't agree on wave counts and whether we're in a quark or a super cycle. It's like, give me a break. Are you kidding me? So Elliott Wave really is easy. We're only looking for 3 setups. There's only 3 setups that I look for in all my trading and that I teach in my courses, right? Here's a book, Elliott Wave Techniques Simplified, simplified being the key word, written by Bennett McDowell. Bennett is my mentor. He's the founder of TradersCoach.com, and we go way back, and he actually invited me. I got to write a chapter in this book. So I'm published, man. Feels good. My name's not on the cover, but I did write a chapter in this book. And Elliot, Bennett and I, and the students he teaches, the students I teach, we have no trouble counting waves. And when I count them, or a student counts them, or Bennett counts them, they're exactly the same. They're very repeatable because it's simple. We just take a very simple approach to it. Okay, so Elliott Wave theory. Ralph Nelson Elliott developed his theory back in the 1930s. Pretty interesting. About the same time that Goichi was working on Ichimoku Cloud over in Japan, Elliott was over here working on his theory. His theory simply says that collective investor psychology, crowd psychology, moves between optimism and pessimism in natural sequences, a series of impulsive and corrective waves. So this is what it looks like. This is the idealized pattern. There's a start, wave 1, there's a pullback, wave 2. Wave 3 is the big dog, right? Wave 3 is the biggest move on the page. Charts don't go to the sky, trees don't either. All major big moves, almost all of them, end up correcting, even if they're going to continue, right? There's a big move, there's a correction, and there's a continuation. Those are the trades I'm looking for. I only try to trade wave 3, 4, and 5, right? Wave 1 and 2 are typically too small. Wave 3 is the biggest one. It comes in when there's a new trend. It can come out of a channel at the end of a previous sequence, right? If wave 4 is big enough, we can trade that correction. And then wave 5 is the continuation of the major trend. We can trade that. Wave 3 is typically the most profitable. Wave 4 is hard to trade, but sometimes that's all you're presented with. Wave 5 is the most probable, right? It's not as big as wave 3 typically, but it's more probable. Why is it more probable? Because there's 4 waves before it that all met very specific criteria. And if we got a chart that's moving in a pattern that is recognizable, the final move is highly probable. Not for sure, but probable. That's pretty cool, right? This works in bullish and bearish markets. You just flip this thing upside down. It looks exactly the same way going down in a bear market. Best not to trade wave 2 and 4. Definitely not 2. 2 is small, and I'm going to show you on some real charts. Okay, 2 is small. We do trade wave 4. Corrections can be tricky. They can have an ABC pattern in them like this, but smaller. So they can be tricky, but we do trade wave 4. If there's plenty of profit potential. Alan says, but you don't know wave 3 until you break it down into smaller waves. That's true. So the only way you really know for sure you got a wave 3 is after it happened. So we can see them begin to happen when they break out of a channel, and we can be expecting a wave 3, but they're not confirmed until they're over, right? That is a true statement. Can I place it on any stock chart and show us? You bet. Let's do it right now, just for fun. Let's take a break from the slides and let's look at a real chart. So here's Duke Energy. This is a trade we took. We just closed it. So wave 3 is easy to spot. It's the biggest, most dramatic price movement on the page, right? Look at this. This is big and it's dramatic, right? There's no move like it. It's helpful. We confirm it with a price oscillator. We can see the amplitude on the price oscillator is the greatest during this move, right? That's wave 3. So look here, 1, 2, 3, right? 4 was tradable. We ended up trading 5. So we took a long on Duke Energy at 79.87, and using some techniques that I'm going to show you in a while about managing the trade, right? We trailed our stop up. Now we can't catch the absolute top. We want to stay with it for as long as the trend is continued. And when the trend ends, we're going to get out. And look here, here's Dow Theory, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Uh-oh, took out the previous low, trend over, right? We got out right there. So we got it in at 79.87. We got out at 84.75 for a nice win. We're only trying to trade the impulsive portions of these moves, right? So that's what it looks like on a real chart. And I'll show you, I'll talk about these Fibonacci lines. It looks busy until we break it down, but we're going to take some charts from scratch, see what's going on. Again, I'll be looking at charts that you're interested in, okay? So that's the deal on Elliott Wave. Here's what it looks like, you know, marked up. So here's wave 1, 2, 3, 4, right? Got a target zone. So after we see a big impulsive wave, right? Typically, again, wave 3, you can see it after it happened. You can catch it breaking out of a channel sometimes. But if you come in and you, oh, there it was, already happened, that's fine. There's still some trades left. We expect after wave 3, after a big impulsive move, a correction. And we expect it to correct into a Fibonacci retracement zone, 38.2 to 61.8. Okay, so we can trade that if there's enough profit. Okay, we can trade that if there's enough profit. Once we get proof, we want proof that the trend has changed, the correction has begun using Dow Theory, lower low, lower high, new low. By the time this one was proved, it was almost in the target zone, so we wouldn't trade that. There's no juice left, right? So we got to wait for wave 5, right? Okay, wave 4 went right into the Fibonacci retracement zone, and then high, higher low, new high. And look, we're using Fibonacci extensions to predict the wave 5 target zone, which is 61.8% to 100% of the 2 to 3, 4 move. So by the time this one proved higher high, higher low, new high, there was some target left, right? There was some money on the table there, so we went ahead and took this trade, right? That's a real trade that we took in Vail. I think Vail might be getting ready. We'll look at Vail. I think it might be getting ready again. Let me just peek over there. I got a note from one of my guys. Oh, this is beautiful. We got to look at this. I said you're going to walk away with actionable trades. I'm jumping ahead, but here's Vail now, right? Here's the move we traded back then. Look at Vail. This is stunning. Okay, yeah, this is the new sequence, right? This is 1, 2, they're tiny. 3, it's huge. 4 retraced perfectly into this retracement zone. I've got these heavy blue lines. We got a wave 5 target zone up here above 1336. That is a nice trade. I'm going to come back to this one as we talk about risk management, because this is a grade A example. So I'm going to talk about the entry price and stop price on this one and how we manage that. Very cool. Okay, so this is how Elliott Wave works, right? Now we overlay it with Ichimoku Cloud. This is where it gets fun, right? We could have caught this trade as it broke out of that channel, right? A channel break is a good setup for me. And you see, we had the crossover of we had a higher high, higher low, new high, and we see Tenkan above Kaijun, and we see price breaking above the cloud. So we've got three systems telling us that there's a good trade setup there. We've got Dow Theory, we've got Elliott Wave, and we've got Ichimoku Cloud saying there's a great long entry there. And it was a great long entry, right? Then the correction happened, wave 4, and then look for wave 5, same thing. Three systems agreed, hey, there's a great long here on Vail, right? Dow Theory, higher high, higher low, new high, right? We got wave 5 clearly defined here with Elliott Wave, and we just got the crossover and the cloud break with Ichimoku Cloud. Doesn't get much better than that. So if we were to lay these two systems together and go, okay, we got Ichimoku Cloud, Elliott Wave, we got all the good things from Ichimoku Cloud, we got a nice price target, at least for wave 4 and 5 on Elliott Wave, and we got an exit point, right? We got an exit point defined at the price target, which is good. That's not excellent, right? There's no reason to take the trade off just because you hit a target. I'd rather let it run for as long as it will, keep my stats healthy, that my winners are as big as possible, you know, while I'm controlling my losers. So there's that, right? So we're still missing some things here for risk management and trade management. So we got to deal with that. All right. So what do we do about that? Well, we use Dow Theory for stop management, right? So as price is putting in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, I'm trailing my stop as I'm going to start here at the low, and then we put in a higher high, higher low. When we put in a new high, I'm going to trail my stop to that previous low, higher high, higher low, trail my stop. You can see, trail my stop, and I'm going to stay with that, and I'm going to take profit, right, at key points along the way. I take it in thirds, take a third of the position off at some key levels, take another third off at the next key level. At the final third, I'm going to let it run, right, and I'm going to let it get stopped out as I trail my stop up all the way through the trend. So not just because it hits the target zone, it may go beyond the target zone. I'm just going to keep trailing my stop and let the reality of price movement tell me when the trend is over. I won't catch the exact top, right? But I'll never bail out too early. I'll get out when the trend is over. So I use this for stop management and stop placement, right? I use Dow Theory for that. Okay, now I'll talk for a moment. Let me see what my next slide is. Yeah, so let's talk about this Vail trade, okay? This is really good. So we got an entry on this. We could enter this right now at current price. So when I do a chart, I like to just mark it up in a very consistent way. So I just draw a horizontal line and I use a consistent color key. So when I come look at the chart later, I'll know exactly what I was thinking. Don't have to go, you know, rebuild it in my mind, right? We've got a higher high, higher low, new high. So my stop's going to go right here under this previous low, right there. Color my stop red. Give a little weight so I can see it. And now let's talk about target. We've got a target zone between 61.8 and 100% Fibonacci extension. So I told you I calculate reward to risk on every trade. I want to make sure there's plenty of profit in the trade relative to risk. So what I do is for calculating reward to risk, I go just inside the lower portion of the target zone. I'm hoping it's going to go high. I hope it goes up beyond it, but I want my trade parameters to be healthy even at the low end here. Okay, I'm going to be conservative. In this case, conservative is an adjective, not a noun. Okay, so now on this trade, I've got an entry price, a stop price, and a target price. What do I do with that? A couple things. I've got my handy dandy calculator, risk management calculator. I do a few things with this. So this is a long trade. So I've got an entry at 912. I've got my stop down here buried in the indicator, 762. 762. and I've got a target at 13.39. All right, so if I had a $50,000 account, what this would tell me is go buy 666 shares, and what that's going to cost you $6,000, right? And if you hit the stop, at 762, you're going to lose 2% of your account, $1,000. That's a tolerable risk. And it's also telling me that the reward to risk ratio in this trade is 2.85 to 1. That's healthy, right? The minimum I'll take is 1.2. I like to have them over 2. 2.85 is a really healthy trade, right? That way, what that means is if it hits my stop, I'm going to lose $1,000. If it hits my target, the low end of the target, I'm going to make 2,850, right? A lot more than I could lose. I'm all about that. I'm digging that. Okay, so I always calculate it this way. And again, my stops are placed based on price on the chart. I don't use an arbitrary fixed stop level. Some people that subscribe to my service, that's a point of confusion. They go, well, why isn't your stop just 5% away from entry or something like that? Why would I do that, right? Right. I want my stop placed at a point on this chart where if it goes down to there, what's that tell me? It tells me that trend, that uptrend, higher high, higher low, new high, that the pattern for that uptrend has been broken. It's no longer an uptrend. That's when I want to get out of that stock, right? Otherwise, it could just be a higher low and it's going to go make new higher highs. And then I trail them as we go. Do I use ATR for stops? No, I use price movement and Dow Theory here for my stop placement and management. Okay, so that was a great trade example. And this one, if you are looking for a trade, I like Vail right now. I'm actually going to be publishing this one to my subscribers. This is a good trade. So there's trade number 1 that we've found for you today. Long on Vail. Again, my opinion, right? Whether you take the trade or not, it's your decision. You assume the risk for that. I like it. I'm going to put my money in it. All right, where was I in the presentation? Okay, we had said we got a great system here. Hey, now we're going to go look at some trades. So I just shared with you a trade that I liked, and we found that Vail. Let me type in some symbols, some stock symbols that you would be interested in, and I will analyze them for you using this method that we've talked about. Bill wants to look at Amazon. Okay. What an amazing company Amazon is. Okay, so Amazon's in wave 3. Remember I said, hey, wave 3, you can't miss it. It's the biggest move on the page, right? So in this case, there it is. There's wave 3. It's huge, right? Wave 1 and 2, we're going to call this initial move 1, 2, right? It could have been here, 1, 2. Guess what? They're about the same point. Doesn't matter. It's not material, right? Here's 2, 3. Now, has 3 ended yet? No. We're still in an uptrend. We haven't put in any meaningful lows, right? We still got higher highs, higher lows, kind of an equal. Didn't put in a new higher high yet, but it did not put in new lows. So this uptrend's still going until we start putting in new lows. And if it does, and if it breaks down below the cloud, if we get something like this, I'll play with these cool drawing tools here that GoToWebinar has built in. If we get something like this, boom, 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 that might be a nice short trade to this target zone. But we're not there yet. Too early. Too early. So we wait. Way too late to go long, right? That is a very mature trend. Is it going to go up from here? I don't know, maybe. I have no idea how far. Very mature. We're starting to lose momentum. You can see a downslope here to the peaks. So I'm not going long on Amazon, and I'm not going short. But it's a great company, and that's a great trend for sure. Oh wow, they're coming in now. Tesla, yeah. What about we just shorted Tesla last week, week before. We caught this move. Unbelievable. We caught this move on a 60-minute chart, right? Clearly, it hadn't broken the cloud. We took an entry here because on the 60-minute chart, it had broken the cloud. I'll show it. Yeah, 30, 60. Right there, we took our entry at that break, right? Because lower low, lower high, broke the cloud. We took our entry, it waited a little bit, bam, right? It went down, we trailed our stop to this gap in this case, and then it got stopped out. Beautiful trade. We were in it 4 or 5 days max. Made a ton of profit. That was nice, right? So what now? Yeah, thanks for that, Dean. What's it going to do now? It actually made it into the retracement zone for the daily chart. Now it could reverse again and go deeper. It could do that, right? But right now I would hold off on trying to trade that until you got a good reversal. Get a good reversal, and there might be another. This could, wave 4 sometimes moves into ABC, so this could be an A, B, C. C is typically 1.5 times longer than A, so you could have a really good 4, C leg of 4 here, but wait for a reversal and you might be able to catch that one on Tesla. Okay, that was for Christian. GLD for Michael. Funny you should ask, Michael. Funny you should ask. We took a long on GLD this morning on a 60-minute chart. So here's trade number 2. Trade number 2. So we're looking at this is a corrective wave trade. So here's the portion of the chart we're concerned with. This is wave 3. This is all impulsive move down currently. We're looking for a retracement up into this Fibonacci retracement zone here on GLD. It's 117.89 to something, 120. There was enough risk to reward. This is about 1.6 to 1. You see, I told you I mark my charts up this way every time. Here's my entry. Here's my stop down at the previous low. Here's my target at the conservative end of the zone. So we're long on GLD, and there's room left. There's room left on this one. This is a 60-minute chart. We would expect this to play out over about 2 to 5 days is the expected time for a trade like this on the 60-minute chart. Okay, how am I doing on my symbols here? Apple. It's a company I love to hate. So Apple is setting up pretty nicely. You can see I've been watching this one. It puts in a new low. So what do we got here? Big long uptrend, wave 3. Massive uptrend, right? Pretty good low, lower high. If it puts in a new low, I got an entry sitting here triggered. We'll take a short on Apple at about 141.69, I think that is. Stops up here at 148.24. And we got a target down here, 131.52. So there's a trade for you, not triggered yet. I would not take it until it puts in a new low at 141.69. There, I've given you 3 trades already. We had Vail, which is ready now. We had Tesla, GLD. Tesla, no, it wasn't ready yet. GLD, ready now, and Apple, a watch list, pretty close. XPO for John. Hey, John. John's in my trading room. Nice of you to show up. So XPO Logistics, it's in a beautiful uptrend, starting to lose momentum. See how the amplitude's coming out of these peaks? So we might be getting a correction soon, but we don't have it yet. There's wave, there's 1, 2, 1, 2, 3. So if it were to correct from here, what would be the target zone? Now, this is a tentative because it hasn't proven that the trend's over yet, right? It's still putting in higher highs, higher lows, higher highs, still positive, everything's still above the cloud, everything. But if it turned lower low, lower high, new low, broke the cloud, where's the target zone? It's here, 48.81 to 38.58. Okay, so that could be a nice one. It's nowhere near ready yet. Evo, yeah, we did Apple. Dominic, PIBHP. Are those two? Let me try BHP. Oh, so here's an interesting one. This is a very orderly chart. So next move on this is probably down. I have to get more data to see where this trend began. Can't analyze the trend if you can't see the beginning of it. There's the beginning of it right there. Okay, get my scale right. So there's the impulsive move down. There's a retracement right into the wave 4 retracement zone. So now we're looking for wave 5 down. Now it started, then it got a little thing going on up here. So we would wait for it to break the cloud again before we got short on this. But if it gets going, there's the target zone. And you got to be careful with these lower price stocks. See, the 100% extension is below zero. It's negative 12.79. Well, guess what? This ain't going below zero. It may go to zero, but it probably is not going to zero. So be very conservative about I would actually make my target zone on this one previous low and the top. That would be my target zone, right? Somewhere like that. Because again, it ain't going below zero, right? So that may be an okay trade if it gets confirmed, but we're not there yet. BHP. TSLA for Mark. I know that stock. I think I've traded it. Well, why didn't you ask me last week? Because we would have got into that. It's too late. We've missed it. You know, it could go double from here. Who knows? But we've missed it. We've totally missed it. Forex for Daniel, U.S. Canadian. Yeah, works on the Forex. Well, look at that. Bank of Canada raised interest rates, and it did not do well for this pair, did it? We had a target zone up here, but this has completely failed. This trend of higher highs, higher lows, higher highs has now been broken, and now it's heading down from here. Not really tradable because this pattern just broke. We don't know what the new trend is. We can't project anything from that at this point. Cisco. Cisco's doing the same thing that the other tech stocks are doing. It looks like it's getting ready to retrace. Right here, it's a little messy. This one's a little erratic, right? It's got a low, lower high, looking for a new low. It's not as clean or have as much profit as Apple. If I were going to try and trade this sector, I like Apple better. Looked like Tesla was getting closer. So those are some better plays for me than Cisco. That's kind of a sloppy chart there. 30-year bond. You got a symbol there, land for 30-year bond. I know we got TLTs, not 30-year, but it's a long-term bond ETF. It actually is looking very bearish, right? Here's the big move. Wave 3 down, wave 4 up into this zone. It looks like I was analyzing it with something here before. It's just now breaking down. This is the 20-year plus bond ETF. There's your target zone for TLT, and it's just breaking the cloud. So look at the growing momentum too. So that could be a good one, good short on TLT. I'm just not catching your question, and you're saying wouldn't correction in October be considered wave 4? I didn't see that now. I don't know what chart you were looking at, man. Sorry. PLPL. I'm always happy to see a new one. You might just give me a new trade. Yeah, so this, these are monsters, right? And biotech's been beaten down and they are starting to come up. So PLPL, oh, you were actually wanting PayPal. Well, PLPL is a good one to watch, except low volume. So be careful about thinly traded issues. This one's got low volume so far today. If you really wanted to trade it, go look at the 10-day average. I like them to be over 200,000 shares on a 10-day average before I take it. But there's one like this. So here comes trade number 4 or 5 for you. Valiant Pharmaceuticals. Are you crazy, Dean? Poster child for many a politician for everything's wrong with Big Pharma. I could care less, right? I could care less. Why? Because this thing's got huge profit potential, right? And absolutely nothing could change about the fundamentals of the company, and this could simply be a short covering rally or a volume driven rally or whatever, right? Look how far this thing's come down from over $250 down. The bottom was about $10, I think. We gotta zoom in on this because of the dramatic price movement. We have to zoom in like crazy and change the scale to even see what's going on here. But it's worth looking. So what do we got? Valiant coming up off a bottom, big retracement potential, right? Higher high, higher low. We took an entry here on the new high at 1456. It's already in what? What's the profit on this thing? In my trading room, we're in 17% profit on the trade already. Not too bad, huh? Right? We had a target on this thing that, I'm embarrassed to even say it just by measuring it here. We got an intermediate target at 32.92. What if it stalls at this previous high here? Gosh, it was only double in price. Well, that's not very exciting because we really got a retracement target up here at $66. Well, either one of those targets, right? We'd be happy at this target, right? But we're gonna let this thing run. That's a great one to buy a long-term call option and just sit on it. Let her run. So there's a trade for you. Valiant Pharmaceutical, symbol VRX, long. Current stop 1192. FLT. FLT for John. I'm going to do a couple more, then I'm going to do something super cool. When I teach my master traders course to folks, part of what we want to do is instant pattern recognition on a chart. There's only 3 trade setups we're looking for, and we're going to see if a wave 3 happened yet. Has it corrected? Is it continuing? One of the things we want is to be able to pull up a chart and within 2 seconds decide whether it's worth analyzing or whether it's just a complete mess. Well, FLT here, Fleet Core, is a complete mess, right? It took me about a half second to see it's a complete mess. So I don't know how much where it dropped off, right? But we talked about the previous chart, FLT being a mess. Here, GM, this is another chart. It's a complete mess, right? When they're just sloppy and erratic and there's no pattern to them, there's no reason to try and analyze them because there's nothing to analyze. And that's I think that's a mistake a lot of traders make. Is they get a little target fixated on, you name it, Apple or Tesla or Priceline, all these kind of marquee stocks, and they go, okay, now how do I trade Priceline? How am I going to trade Priceline? And I think the big question is, should I trade Priceline or Apple or Tesla, right? And if there's not a good pattern, the answer is no. Go find a good chart. There's thousands of them. There's good ones out there, right? Simon, SYMC currently long after wave 4 on a daily according to his analysis. Got to be worth a free training course. I'll tell you what, Simon, if I like the trade, before I type it, if I like the trade, I'll give you a week in the trading room, free week in the trading room. How's that? SYMC. Did I type it right? I typed your name. you know what? You're right. It's almost ready. But your wave count, I agree with your wave count 100%. So Simon, send me an email to dean@followmetrades.com and just say, hey, it's Simon, I want my free week. And you got it. You got it, man. All right, there we go. We're just waiting for it to break the cloud. It looks like wave 4 starting. We got our high. We really want a higher low, new high, pop the cloud. You don't have to push it. There's plenty of room to the target there, but I agree with the wave count 100%. So nice work. Yeah, at a glance. After you've looked at about 10,000 of these charts, you can see these patterns pretty much instantly. And you can see when they're not there even faster. So I don't know when the connection dropped, but FLT was where I started making this point. There's no pattern, right? I can see that in a tenth of a second. There is zero pattern, man. That's a mess. Okay. Hey, so let's talk about how to find Amit is asking what's the best combination of other indicators with Ichimoku. I'm using a price oscillator here. It's from Trader's Coach. It's called the OWL, Optimum Wave Locator. I really want to check momentum changes. This bottom strip is called the Precision Trend Filter, similar to an RSI but better. And it's just a filter. Red means predicting more lows. You can see it's accurate. It did when it turned red. It predicted more lows. When it turns green, it predicts more highs. It's accurate, right? So it's helpful. It's just a confirmation before I take the trade. Do I use a scan? What a nice straight man, Michael. That's how I wanted that's where I wanted to go next, was talk about scanning. So we got this cool Ichimoku Cloud. All these Ichimoku Cloud elements are, data points, right? So we can load Ichimoku Cloud into a scanner. This is radar screen from TradeStation. All platforms have some version of this table where you can put symbols and indicators and get the numeric values, right? So I thought I'd just put, you can add an alert when prices get above the cloud or below the cloud or whatever. So here we are, Ichimoku Cloud, NASDAQ 100, right? Let's analyze 100 stocks real quick. NASDAQ 100, why not? So as we were looking, we saw Apple and Cisco and Tesla and all these other kind of tech things look like they may have found a top and maybe starting down, except today the Dow put in record highs. But that just because the Dow put in a record high doesn't mean that we may not be starting a tech correction. That may be happening. So that'll be my working thesis, that the tech stocks are going to start a correction, a wave 4. So here we are, NASDAQ 100, biggest 100 stocks in NASDAQ. Well, let's just go analyze these. So we got all our data here for Tenkan Kaijun, Span A, Span B, and then, so trend direction's down if Tenkan is below Kaijun, and we want to know if the price is above or below the cloud. Ignore the Chiku. I don't use the Chiku. I don't find it useful at all in my approach, okay? So, wow. Wouldn't it be cool if I could sort all this? Well, I can copy this, right? Copy all this data, and I can plop it on spreadsheet. The power of Excel. I love Excel. I'm a data geek. So I just pasted it over here, and then I added a logic statement or two. I said, hey, if the trend price is down and price is below the cloud, like here, price down below the cloud, then that's true, it's a bearish signal. If price is up, trend direction's up and price is above the cloud, that is a bullish signal. And then I go, how close is price to the edge of the cloud? Because I want it close. I want new ones that just broke the cloud. Great, I got all this data. Let's just sort it. What I'm looking for is, I'm going to find bearish trades that just broke the cloud. So sort. My data has headers. I want to sort on bear signals. That I want to add a level, and I want to sort on percent below the cloud, smallest to largest. there's my prioritized list of candidates to go search, right? Out of the entire NASDAQ 100, right? I'd probably go look at these 10. And out of 10 to 15 charts, it takes 10 to 15 charts to go find one good candidate, typically, right? But I can do it fast. So let's look at it. ILMN. ILMN, you can see it is, we do have a crossover, it is below the cloud. This thing's a hot mess, right? I don't want any part of this. Forget that one. ADI. ADI, if it puts in a new low, it could be a good one, but we got to wait on that one. We actually tried that one and it didn't work out. Bugger. CTXS. There's a good one. So if we were to get in right now, and we would have our stop here, right? Lower, low, lower, high, new low. There's our stop. There's our target. It's barely got enough profit. So patterns there is worth futzing with, but there's probably not a profit enough. Probably find a better one than that. TXN, we're actually in that trade. Cisco we looked at, Apple we looked at. Let's look at paychecks. Pretty messy chart there. Not excited about it. Come on, if I want to find you a new good one using the scan. And sometimes it works, sometimes it doesn't. Yeah, Amit says, hey, you were talking about the cloud thickness as resistance, but where there's the reversals, we see a thick cloud. Not always. Look here on this one. As it's breaking, right, it's breaking at the thinnest portions. Now, that's not a 100% rule, right? But typically we're seeing the break at the thinner portions. Amit is saying we cannot trade blindly unless we do some fundamental analysis. Well, that's a personal choice, right? I trade based on, I'm a technical trader. I was a fundamental trader for years. I got an MBA and I know how to go do ratios and study financials and do all that stuff. And I did all that stuff, put tons of hours into it, researching companies, and it was hit or miss, absolutely hit or miss. You know, great company, great products, great management, come out with a great earnings report, and that thing would tank because it wasn't good enough. It drove me crazy, right? It's what drove me to technical analysis, right? What's the market going to do? I have no idea, right? What is the market doing? I can analyze what the market is doing, and the reality of price doesn't lie. There's only two realities in the market: price and volume. So before I trade, do I go check? Is there big news pending, right? Is it a drug company that's got a drug release, DEA or what? Not DEA, right? The drug regulator people, are they going to announce testing results 2 days from now? Well, I don't want to trade into that, right? Are they going to announce earnings tomorrow? Is there a merger pending, right? Are they filing Chapter 11? I do a quick headline scan to make sure nothing disruptive is known. But if there's no known disruptions coming, then I'm just focused on the technical trading. But that's my choice, right? Everybody's got their own, it's your money. Do what you're comfortable with. But that's my deal. Okay, we were scanning for trades, and we're at 1 hour. So I got 1 hour and 1 minute. I got 14 minutes left. I want to make good use of it. Gosh, I wanted to find you another one. CMCSA. Beauty. Sweet. We've got it. There's your Comcast. Okay. It's all there. Yep. So it took us what? I spent a lot of time talking. We looked at 9 charts. Number 10 was the jackpot. That's not too bad out of 100. Okay, so we could take an entry right now, short, but it's heading up, Dean. Yeah, it's better. You get a better entry, right? Lower low, lower high, lower low, lower high, lower low, right? You could take an entry at current price right there. Now our stop's going to be a little far away on this one, right? Let's put it on this little shoulder right here. I think that's good. We got the cloud providing some cover for us. And so here's our target. That's a 2.5 to 1 return to reward to risk ratio. Distance from here to here is the risk. Distance from here to here is the reward. That's not a bad looking trade. Comcast, CMCSA. All right, I've been talking for an hour and 3 minutes. Got a few minutes to go. Hey, what I'd like to do is make you an offer. If you really like what I'm doing here, if you think it's interesting, I'd encourage you to do one of two things. You can join my live trading room. We're there in the mornings for an hour, 45 minutes from the market open. So it's 6:15 Pacific time to 7:45, and that's 9:15 to 10:45 Eastern time. We do exactly what I'm doing right here, find good trades. We're analyzing the market, we watch the direction of gold, oil, and the indexes, and we go look for good trades. We're in a bunch of them right now. This is the trading room positions. We got 4 short trades and 1, 2, 3, 4, 5, 6, 7 long trades. Here's the P&L for these trades, and if we were to sum this up right now, just for fun, what's our snapshot P&L on the trading room trades? If we were to close them all right now, how much money would we make? Don't have to guess. Let's just do the math. We would make, these are real. You know, I'm calling these out in front of people, and people in the trading room, some of them are here. Yeah, they keep me honest. I can't make this up. Right there, 10 grand on a, these are all sized for a $50,000 account. They've been open, most of them in June, a couple longer term ones here. 10 grand on a $50,000 account, so 20%. If we were to close them right now, that's not so bad. It's not so bad. And we have so far year to date, I think we're at about 20% gain on the ones we have closed. So that's the live trading room. We do pretty much what I'm doing here. And you're welcome to join. I got a link for you. Okay, get this link up here. There it is. List price on that, $79 a month. Here at this webinar, you can get 25% discount and get in for $59 a month. And I don't think I have it on here. There's a 30-day money-back guarantee. You know, I want you to be happy. If it's not your thing, if you show up and you go, nah, it's not for me. First 30 days, I'll just give you 100% refund. No questions asked, no hard feelings. Just I want you to be the right place. I want it to work for you. So I'm sending that link right now. Okay, so the live trading room, $59 a month, 25% discount. I also have a stock pick service. So here's the stock picks, right? These are stocks that I'm trading in my own account with my own money, right? The performance of that over several years is up on my website on FollowMeTrades.com. I can show you real quick. We're good for time. It's nice. Usually in these webinars we're rushed, but not so much here. But here's my website, FollowMeTrades.com, right? Here's my scorecard. Over the last 4 years before this was 5th year, right? We're beating the indexes like crazy and knocking out some good returns. I don't claim you're going to make $1,000 a month on a $1,000 account. You're going to make millions. We make good, solid, consistent returns by managing risk and managing our trades effectively. So that's the deal. So if you want to get in on those, it's 1 to 2 picks per week, right? You can try them for 30 days, a trial for $39. And then same thing, 100%, money back guarantee the first 30 days. Try it. You know, most people stay. Some people it's not a good fit. 100% money back guarantee, and you know, that's real. You can go read a review on tradingschools.org. Toughest guy on the planet, right? Emmett Moore. If you haven't read Emmett's stuff, it is hilarious. Where is it? Sorry, got distracted. Here we go. So Emmett is a reviewer of trading rooms and trading people, and he absolutely scorched earth, is scorched earth for most people, but he did a review on me. This is a follow-up. He's reviewed me twice. 5 stars, man. And he has talked to several of my customers and confirmed that I actually do refunds when people ask for it with no hassle. So check that out, tradingschools.org. That's fun, entertaining reading. Anyway, 30 picks for 30 days, 39 bucks. After that, it's 97 a month, which is a discount. And here's the special. Today, if you buy one of those, super special deal. If you take one of those offers, I got to get the link up for the thing, for the picks for you. You do one of them, you get the other one for free for 30 days. If you're deciding, I don't know if I want the picks or the trading room, take the trial, 30-day trial on either one of them. Later today, after the orders come in, I'll set you up and send you a welcome. You get 30-day free trial for the one. This offer is only good during this session. So when the webinar's over, right, the offer's over. You can still take the trial on either one of them, but the buy one, get one, that ends when the webinar ends. So those links are in the chat area, okay? Do I go through all the setups? Absolutely, just like we're doing right here, okay? So just like we're doing here. And I answer questions, do teaching. We just have a great time. What questions do you have? I think I've got 6 minutes left, and I'm all yours. Whatever I can help you with. Or if you got any other charts you'd like to look at, I can absolutely do that as well. Is there a good Elliott Wave indicator? No. There are indicators that help you with it, but I've never seen an indicator that actually nails it, right? There's some that can help, right? The one I'm using here, the optimum wave locator on my charts, helps, absolutely helps. This pink dot here is suggesting wave 3, and it's right almost all the time. Do you ever see a wave 5? I see wave 5 all the time, Bill. See wave 5 all the time. Let's see the positions we're in right now. Are any of these wave 5 trades? Oh, that one I showed you earlier, Vail. Vail is absolutely a wave 5. There's 3, big move up. There's 4, the correction. We're trading 5. This is a wave 5 trade up to this wave 5 target zone. Yeah, my mentor, Bennett McDowell from traderscoach.com, sells software. I'm using it right here in front of you. This is the optimum wave locator. This is the precision trend filter, and I also use, I turned it off for this because I didn't want to confuse people, but I use the pyramids as well. They help with the identifying higher highs, higher lows. So these pyramids help. That's from Traders Coach, and I use that. What's the difference between the trading room and the stock picks? Yeah, good question. The duration, so we do some shorter term picks in the trading room. So the trading room, you got to be there, right? I put the picks up on the website as they happen so you can go refer to them, but I'm not going to send updates throughout the day. As things change on the trades, I'm not going to be sending updates, right? So you have to catch the parameters and manage the trades on your own. With the stock picks, I publish the picks and I give you updates every step of the way, right? The entry, the price, the target, then we're going to take profit, then we're going to move our stop. I give you option contract parameters. So pretty much every trade, 95% of the trades we take, I love trading with options. I'm a directional option trader. I buy calls, I buy puts. So on Vail here, I would say, hey, Vail, you know, we got a good entry here at 912. We got to stop at 762. We got a target at 1339. It's ready to enter right now. You can trade it with shares, go along the shares if that's your thing. Oh, but here's the option contract I'm going to use. I'm going to use a call contract with strike price and expiration date of such and such. Okay, so I publish the option parameters along with the underlying chart. All the decisions, all the actions are driven off the underlying, right? But we can trade it with an option. And I think I am pushing up against my deadline here. So Dan, is it back to you now?
Dean, you've got a couple more minutes if you want to answer a few more questions.
Okay, perfect. Hey, I brought it in right on, just about on the money though, huh?
Yeah, very nice.
Okay. Hey, Tent, you're welcome. Very nice. And I'll be careful not to shut the room down when I leave, Dan. I'll make sure I don't do that. Okay. Hey, Lars, right. Thank you. Thank you for showing up. Thank you everybody for all your great interaction, great questions. Enjoyed looking at your picks there. And the links are posted in that chat area. So again, you can get that BOGO, the buy one, get one free while the webinar is going on. But once it's over, you can still buy the things at a discount, 30-day trial, but the 2-for-1's off.